Okay, so here we go. Okay, so you can see that this is what we talked about gold before I left. Okay, so the gold chart shows that this is the CCRY. Now, the essence of TWB system, remember, is always about these two colors, red, yellow, yellow, red. Red means market must come down first. Then it has to U-turn. It's just like this point, turning point here. We are trying to buy here. All right, this is point A, this is point B, and this point C. All right, we are buying at point B. Now the question is this, Kel, how come you don't teach us to buy at point X? Now, first of all, let's just be honest here. How would you know where is point X? Okay, number two, there is a method to basically buy near to point X, somewhere like this. Example, this is called X1 example. All right, it is possible to buy at X1, but that will need you to learn the PTP method. Now, PTP method, the probability is that if you buy X1, right, the market may pull back and then you may have to hit stop loss several times before you get it right. But in exchange for that, right, is high risk, high return. Because if the market is to go, if you buy an X1 and let's say the market really, happen to stop there, then the probability of you making a lot of money from X1 to C will be very high. You see, the thing is that because the stop loss is still be somewhere around here. So which is the reason why we, for PTP students, is able to buy at X1 and stop loss near to the low here. That's the difference. Can you see that? So if that's the case itself, right, the rate of return can be more than easily 5-6 times compared if you buy a B. So that is a difference between a PTP student and a regular student. Got the idea? Okay, all right. So this trade, why is it a good trade? First of all, it's a classic trade whereby you can, it's a very classical trade, classical trade because there's a BNB involved. All right. Then the KSI green. The only thing a bit of downer is that there is some blue bar, but it's fine. A bit of blue is fine. Okay. And the KCX is still there, blinking. So which means that subsequently, right, all the CCRYs, right, you can still trade with that. And of course, more important thing is that because it's a BNB, if you notice that you need to put the RL and the SL, right? You notice that the RL and the cage happen to be, the cage itself, right? It's about the same level. So if the market break above the RL, which is the cage 2, then the market to go up is going to be very high possibility, right? So it's all in line. And of course, you look at the chart again, you notice that this is a BNB. You notice it's another BNB. So I think you've seen it before, right? When you see two BNB very near to one another, right? What do you expect to see from the market? When you see two BNB very near to one another, right? What do you expect to see? Can you tell me? What do you expect to see when the market has two BNB very near one another? I wait for your answer. How many of you? 20 of you all, yeah? Okay, Ken. Hey, no reply. Or is it my thing going slow? Okay, now mind. Big movement. Yes, correct. Liping. Yeah, indeed. Whenever you see a BNB and a BNB very near one another, right, there is a very good possibility of a big movement coming soon. Big movement coming soon. So now with this expectation itself, right, where can we expect? How much do you think that gold will go higher, right? So you notice that since a BNB, then of course we know that we can use this BNB indicator, right, whereby we can calculate the BNB, the potential upside downside, right? Okay. So you take the gold now, you take the BNB and put it in. Here we go. So which means that now, right, gold has a possibility of crossing 1809, which is the BNB RL. It may be going towards this point here, 1827. Yes, correct. So let's say that gold really has to go higher, right? There is a possibility for gold to go to 1827 because there's a 1x1 value. So with the KSI green, with the cage breakout, with the BNB involved, right, it seems that there is a very good chance that gold can go to 1827. But of course, in terms of fundamental, how can gold go to 1827, right? Either it's because there's some inflation going on, or is it because that there is a dollar that is coming down? So let's look at the dollar, okay? Look at the dollar. Okay, this is the US dollar. I bring it in. You notice that the US dollar has came down. And if you believe in BNB, you will see that structurally, right, you can see that BNB for on dollar was here. That was about 20th or 21st of July. Then the market tried to stay above the BNB SL first for 2 days. But the day when the market loses the BNB SL, right, you notice that the market really go down all the way and trigger the BNB 1x1. So if you have shorted the dollar, you have profited. And those who have been shorting, going long on the euro and pound, right, you will have made money from this round. Okay, question from Karen. Does it matter whether one BNB is red and the other is yellow? It doesn't matter, Karen. It can be all 3 red or 3 yellow, doesn't matter. It's just that the BNB has to be very near one another. When you say near, there's no actual answer like, oh, must be 1 bar away or 2 bar away. It's between 2 to 3 bar usually. That will be the best. That will give you that the consolidation is actually there. That could be an impactful move later on. You get it, Karen? Okay. So the thing is, wow, then how much will the dollar be going? We won't know because now already the market has hit the 1x1. So the rest over here is up to the market to decide. Okay, so just take note of that. Huh? Okay, so you got an idea now? So with all this sharing, we go back again. Okay, if you look at your chart right now, right, you notice that the next technical level, which is next KCB that you can use, will be all the way until 1859. Okay, 1859. So if you believe that you will go to the next KCB, then you can just take a profit at 1859. But if you think that you will be very careful, then 1820 is MLP of the weekly bar. 1836 is the level of the next FIBO number. Then if you still want to be more, then after that, the next number is 1859. So there are a few numbers you can consider to take partial profit along the way. But if you think that, no, it's okay, I don't need to bother anymore, I just want to hold it all the way to 1859, then of course, you can just do that. Okay? All clear on this? So that will be the goal that I need to share with you, at least for today. Okay? All right, all clear? Good, right? Okay, so that is the gold momentum. Okay? Now, some people ask me, Kel, I bought gold already. Can I need to do a SWL now? Well, of course, if you want to take a SWL to make sure to protect your profit, that's fine. But again, now current price to the entry is only $5-6. So if you put SWL with too near, right, likelihood there will be a trigger if the market just pull back down. So usually for gold, I will consider putting SWL only if I take some profit already. Example, at 1820, I take some profit first, then I shift SWL. So like that, right, I lock my profit for some part of my position, and the remaining, even the market pull back now, right, I don't lose out. If you don't take partial profit and do SWL, it's not wrong, but the point is this, the market may shake you down, hit your level, then you may be exited from that position, then the market go back up again, right, then you have nothing to gain from there. Can you understand my point? So if you want to do an SWL now, which is showing level, shift up the stop loss, then you may want to consider take some profit. So if those want to take some profit, right, 1820 can take some first. Okay, that's MLP of the weekly chart. All clear? All right. So that is what I can suggest to you. But again, of course, I won't know your size. Maybe you trade 10 lot, 20 lot, 100 lot. Then if you think that you're already in very good sizable profit, you want to get out, I think that's fine. That's absolutely fine too. Okay. Okay. So that is the gold market. Now look at silver. Now silver has also jumped up yesterday, right? You can see the silver jump up because the dollar weakened, right? So the silver also jumped up, and today the silver pushed up already. So I did say that if silver can come to $24 to buy some, if not buy some $25, now it's trading a bit higher now. Now it's $25.20, so up by 20 cents. But overall, it's still down below the MA30 and MA200. So we still have to wait a bit more for it to find a base. But definitely for sure now, you can see that today the MLP is here. So the market is trading above MLP. So likelihood, right, there is the there's a good chance that the market can go higher back to the MA 30 level. Okay, guys, all clear on that? So for silver today, let's look at silver. Now, today's silver day chart is here, and you can see that now the day chart has already, the silver has broke above the opening price. Silver has broke above the, pivot 1 price, okay? So above OP, above pivot 1 is a buy, okay? Above OP, above pivot 1 is a buy. And there's a KCX at the bottom, right? So if any time there's a CCRY, right, it will be a good buy for silver, but for intraday trading, so for today, right, silver all the way has been going up. Also got no chance to enter the market. Sorry, I talked about gold 15 minutes. Sorry, my bad. Okay, so this is silver all the way, but once it broke above OP and pivot 1, you see that once it broke above that, the market just keep on going higher. And the market have no chance of coming down. That's why when the market break OP and pivot 1, right, you cannot short one. The market is very strong already. Please do not do that. That's why I keep on telling people this. Don't do things that you don't want to be hurt, okay? So for today's gold, so I missed out, apology on that. Okay, so today gold, right, today got no chance on CCRY, look at it, no chance. But you know the rule, above OP, above pivot 1, buy right, it's already a buy already. Just that there's no color change on the M15, right? But I'm quite sure some of you all didn't wait for M15, you already enter M5, example, you go M5, you already could have entered here already, right? You see, if you're doing M5 trading, above OP, above pivot 1, you could have entered already, and you're now in profit, okay? So, end of the day is that I told you guys, the rule of thumb is above OP, above pivot 1, CCRY can buy. All right, of course, the preferred is M15, but if you want to go a lower time frame, you want to go an M1 some more, I can't stop you because you take the risk, but just like you know that, right, certain time, if the market is that strong, it doesn't give you a chance. So maybe later for M15, maybe there's a pullback, then maybe there's a buying opportunity again that you can try, okay? So at least for now, there's nothing you can do if you're talking about M15. Now, usually I see a big candle like this. I basically tell myself already, a big candle like this is like $7, right? If the market cannot break below this point here, the midpoint here, likely to go up again. This is again something you learn in PTP. So you see, PTP got a lot of things you can learn from me in terms of other external stuff. But if not, just if you are very happy with CCRY and all these things, then that is fine. Okay. All right. So everybody clear on this? Okay. So all clear on gold and silver. Okay. Got the red color come out already. As we are talking right now, the red has came out already. So stand by, trader, stand by. Okay. All right, so that is gold and silver. Let's look at the crude oil now. Okay, crude oil has also tell you, right? Crude oil, I told you, been holding at about 71.81. But I also tell you that if crude oil can go past 72 level, right? Crude oil can go higher. Now it already broke my $72.22 already. It's broken it. So that means that crude oil should be heading towards 74 level soon. Okay, I believe that crude oil is going to go to $74 soon. Okay, so for people who believe in crude oil, you can try. Now, of course, if crude oil goes higher, usually the stock market will go higher. So a bit contrary to what I said earlier, right, about the Dow Jones. So, well, we see how it goes. If this crude oil goes up, it's purely on inflation and dollar weakness, right? You can see the case whereby the crude oil goes up, but the equity market come down. It is possible. It all depends on the market, which side are they want to be on now. Even though the inflation side itself, right, and they think that inflation is going to be a problem for cost, then they'll sell the equity. But if you say that, okay, cost increase, but that means revenue increase, and economically everybody is good, they go buy the equity. So you see, the problem is that 1 + 1 is never 2 equal the financial market. The same thing they can say today can be the opposite they say tomorrow on the same thing. Can you understand that? Yeah, that is why I say the best thing is follow the chart. The chart say buy, you buy. The chart say sell, you sell. If not, right, you're going to put in all this fundamental into this, you go crazy. Just an example like the yield itself, right? One moment the yield is up, you say it's inflation. One moment the yield is down, you say there's economic worry. So no matter how is it that you want to do, they just make you go crazy on this. Whatever they want to tell you, they tell you, and you just have to follow through. And you're being chained by them, by the nose, and they tell you what to do, you just follow. Got my idea? Yeah, so that is my point. So for the crude oil price today now, it's above OP now, and the KSI is green. So above OP, above pivot 1, it'll be a buy already, right? So look out for this. Above OP, above pivot 1, crude oil will be a buy already. So this is something to watch out for. The crude oil, the next target could be as high as $73.12 because that's the TSCB level. TSCB is only available for PTP student. And if we cross past this level, right, usually it will go to the next chocolate bar level, which was $74.54, which is the target I mentioned, was $74. So traders, you can look out for crude oil, okay? KSI is green in color, so that means that overall it's still pretty positive for this particular market. Okay, all right, so you get the idea, you got the concept, all clear? Okay, all right, so that will be all for the part one, okay, part one of all the technical analysis for all the charts, okay? All right, so we're going to go into fundamental right now. Okay, let me just bring the chart back. Okay. Okay, there we go. Okay, so let's continue all the global news. Then after that, about the why the market is bullish. Then talk about all the alternate market views. There's a lot of video today to show you, so you must turn on your volume a little bit. Okay, all right. If you cannot hear later on, I'll try my best to put it onto the group chats. Okay, I mean there's only some limit I can do. Yeah. Okay, let's go. Okay, so we have already, we saw Facebook also, the data was good, everything was good. So now today, Thursday, nothing much really. All the big five of them already, the earnings come out all higher than expected. But the problem is this, all the after sales, after market, the price is now. So that's why I say that slightly there will be profit taking these 2 weeks. If they say that is how people do it, buy on rumors, sell on news. Okay. All right. So remember, Susan will go live today. Okay. Today is every Monday to Friday. Susan will go live. Then of course on Thursday she take a break. Okay. So tonight there will be a special session. Tonight I will be talking about my life-changing moment when I was away. Now I think that this is something that I never talked to my family members. No, I talk to anybody. I mean, pretty quiet on this because it's more like a taboo and stuff. But I think that in life it's like that. Once you really want to walk out of certain thing, it's always good to revisit and then move on. Okay, just like if, for example, like if you have a very terrible experience on certain thing and stuff, right? Usually people will just shun away from it. But this ever fear or this so-called downside or this dark side will always be there. So the only way is that you revisit it, go through it, and then you move on. So that is the only way you can have happiness and peace at heart. All right. So that's the reason why later on we will do this. TWB group 2. Okay. So of course my August will be we're confirming right now, but because of the current COVID situation, some of the hotels are being utilized. We mentioned the ones is that if let's say the government wants it, in case the number go explosive, then this thing there might be a little bit of problem. Okay. Okay, something wrong with the internet. Okay, hold on. Okay, there was some intermittent stop. Earlier I said that do note once again that we will confirm the venue ASAP once we get the hotel to confirm or the location to be confirmed, because it could be a full 3 days, and if let's say and the numbers can be more than the numbers that we can afford to put in the office, then we have to move it outside. Okay, I'll get back to you all later. So people who have signed up already, like Andrew, people like Leroy, people like One Gun, and of course Basil, they all joined. So more people joining is, so you're not the only one who's guys. You can just join us. Okay. Okay. I do once again, we are just 2 days away from the price revision from our current price 1688 to 28. Okay, to 888. So don't your friend join us. get the best of the price. But of course, when it comes to 262, 888, right, benefits of the is this pay for more benefits, or you want to use the current benefits now and pay for something lesser. So it's actually a very personal thing. You make your own decision. Okay. Oh dear. Okay, so there's some intermittent break earlier. I think now it's coming back fine. All can hear me? Okay, I think there's some. I'm using hotspot right now, so shouldn't be a problem. Can you all hear me loud and clear? If yes, just give me just hit the word yes. Okay, need some response. If you can, then I can actually continue so that I won't be. Okay, now can hear. Okay, let me continue. Earlier was, I think it went down a little bit. Okay, all right, let's continue. So what we have is that the key US data, and the day before, sorry, yesterday. Yesterday we have the crude oil inventories is about minus 4 million barrel. But seriously, for crude oil, right, this inventories really doesn't give any much information. It doesn't really help. So I just usually don't bother by that. I just see the crude oil price movement. Now, of course, we know Federal Reserve has maintained the interest rate at 0.25%. And of course, FOMC minutes came out. I mean, press conference, later you'll hear it for yourself. He said that, right, there will not be tapering in the near term. So that's the reason why the market is like the dollar habituatory, okay? So the Dow yesterday initially came out first for about 100 and 150 points. Then after it recovers, they come out again. We met again, they came down again. So it was a very choppy market yesterday. But overall itself, right, there was some buying. Then after that, due to whatever the Jerome Powell says, the market just takes some profit. But overall, it was down a little bit now. Very small figures, 0.36% only. So what happened is that yesterday S&P 500 closed flat as Federal keep to the easy policy, and of course Alphabet and Boeing shares jump. Okay, talk about this shortly with Cramer involved. So Jerome Powell says that substantial economic improvement is needed for the central bank to start dialing back its easy money policy. So in short, there is no need to do that right now because there's no substantial economic improvement. That's what Federal Reserve Jerome Powell says. And basically, it's all right. Companies like Alphabet went up after they post the sales. Alphabet was doing well. Even Boeing did very well, up by 4.2% after they post their first profit since the third quarter of 2019. So it's all because of the aircraft deliveries. All right. So in the FOMC meeting, right, they keep interest rate low and they want to make sure that the economy strengthens first. And of course, the main thing is that because of that, they'll continue to buy the securities, $120 billion in bonds and securities until further progress. So that's why I would say this, guys, the market will still go up. Heard me loud and clear? The market will still go up. All right. So any pullback, any substantial pullback, the next few days will be a good time to buy into the market because they're still going to pump in 120 until the last two slides, then you see how does Federal Reserve do with this 120 billion after every FOMC. You will see a very, very interesting pattern. And you just have to follow through, right? You can't be too far wrong, okay? All right. So Jerome Powell says that, right, the rising threat that is actually now is a pandemic and the Delta variant is the one. Okay, that's why we talk about the Delta variant, but of course people may not like it, but still this is the main concern. Now FOMC, Jerome Powell himself is informing you that he is actually concerned. So that's why I don't understand that people tell me that this is not important. Actually, it's important when this is what the main concern of Federal Reserve. They're telling you that, right, the Delta variant is actually a problem. So if you tell you it's a problem, then you really take serious, take serious what they call note on this, rather than you just trying to be stubborn and tell me that it's not important. Okay. Then of course, but still, nonetheless, the market is still at a very strong earnings season. Now up to 89% of those who reported, right, has top earning estimate, and 86% have exceeded. Okay, wow. Okay, so it seems that everything is perfect now. Everything is good. The market is strong. Okay, that's my point right now. The market is really, really strong. So let's review what happened yesterday. Now, pardon this. This is actually not supposed to be there. This is the pivot, but it shouldn't be there. I think there's some error when I do the screenshot, so I make a mosaic over it. So yesterday there is no pivot day, but KSI is green, right? So what you need to do is just focus on the buy if the market is above OP. So if you look at it, right, yesterday there was a very, very flat day. The market hardly moved much. So as long as the market is above OP, right, you look for CCRY to buy. So you can see that there were numerous cases where the market hit the OP or stay above OP, right? It's a buy. So of course, not everyone turned out profitable, but overall it's still okay. All right. The other thing is this: if you take profit at KTR +1, you will have able to take a profit around here because the KSI, right? Remember the day chart KSI is green in color, right? The day chart KSI is green in color. So for the market to hit KTR +1 is actually inevitable. So that's the reason why when we buy here itself, I mentioned to you, right, 35094 will be good. It's a good level to buy. To buy and take profit here. And truth be told, the market really go to 35094. So that's why when we buy, we know what to do. We can take profit based on the rule of thumb. Of course, you can use the X theory to exit your position. It's up to you. But at least you know that the probability of market going to KTR +1 is there because the KSI is green in color for the day chart. And of course, if the market combines with the intraday, day chart, intraday KSI is also green, then green plus day chart green, then obviously the market upside is high. If the market is having a red color KSI at the bottom, then it will struggle. Then it will actually struggle. You got my point? So that's the reason why I say that you really need to combine everything together to get the best of the system. Okay? Got it? Thanks. Now for gold, you can see yesterday, gold was actually quite a difficult trade yesterday. The opening price was actually between the two pivot, but the KSI is green in color, right? So you know already by direct, you know that KTR -1 to KTR -3 will be a good time to look out for buy. So in that perception, if you just remember what I just said about when the KSI is green, look out for KTR -1, -2, -3, right? That will be a better choice. When KTR is red, then you look out for KTR +1, +2, +3 to sell. That is how you trade. So of course, what happened? You can see that the market did not even have a chance to come down to KTR -1. Don't have, not even a chance to go down. Okay, but then when the market goes above OP, right now this is the OP, and you can see that there's a BNB right here straight away, a BNB. So BNB, CCRY, KSI is green, day chart is green. That's why the market goes up. Okay, and of course you go to KTR +1 very easily, very nicely, right? Then after that, it started to swing around here, just couldn't stay up. Then after that, it went down, which triggered a CCYR pivot 1. That is whereby you should aim for the next target level, which is the OP, right? Because the next available level will be OP. After KTR +1, the next level is OP, then KTR -1. That is how the sequence is. Then after that, the market sweep around here, bang up and down. Then after that, what you see, a KCX turn in. Then the CCRY came in. And this CCRY, right, came with the BNB right here. Can you see that? So CCRY with BNB, that's why the gold price gradually go back up to the pivot 1. But after that, when the news came out, right, when FOMC came out, that's already very, very late. You shouldn't be traded. Now, I know one of my trade, actually, I was buying and I SWL, that I put it somewhere around here. Sorry. Somewhere around here. Then after that, the market, due to the FOMC, the news came down, my level was stopped out. Then before I know it, the market go up again. I mean, this is life lah. When you're playing with news and then you put a stop loss button, but if the market really had to swing because there's some news coming out, right, then you have to pay lah. So if people who actually buy here, stop loss, put it here, you will be triggered lah on this day. No choice, because the market did swing before it goes up. So that's the reason why once we hit the end of GTH, right, usually we just close our position and move on already. If you actually want to hold it overnight and there's a news, or I mean there's a big news coming in, or there's an announcement, or there is a meeting, then you have to take the chance that the market may trigger you out before it runs. Okay, so got the idea now? All clear? Yeah, okay. So now we talk about the more local news. So yesterday, the primary news is all about the Federal Reserve. So I got 3 videos for you to watch, okay? 3 videos, okay? So turn on your volume so that you can watch it, okay? If you cannot hear it, then I'll replay it later. Okay? No
change in interest rates now. The Federal Reserve keeping interest rates in the range of 0 to 1/4 Treasuries, millennial mortgages. The decision was made range, what I'm saying from part of the fact. You got to make one. He had just said.
Facility, the standing repo facility, $500 billion. That's like Treasuries, the agencies, agency, MBS. What do you think?
Okay, so y'all cannot hear, is it? It's dropping intermittently, right? Okay, never mind. So I will put out the 3 videos I prepared for you. This is this first video, then this is second video. Okay, so basically to just summarize, first of all, Federal Reserve definitely they have kept the interest rate to the same level, and they are still saying that because there's no substantial growth, because you can see that the unemployment data is actually still down, the housing numbers are coming down, so and the economy is not doing that well. So that is the reason why, even though that the inflation is going up, but they keep on using the word transitory because they just buy it and hope that maybe later on when everything really come down proper, there'll be a good time to buy into the market. Okay. Then of course the main thing is that he's also worried about the current COVID case. You must understand that US also is like a big brother. So if the whole world is actually feeling sick or getting sick, right, they won't be actually enjoy in this whole movement. So that's why they also feel that this COVID wave is something that they watch out for. And of course, they don't want to make the same mistake again that, having COVID, but they reacted too slowly. So they are still, since they are doing tapering, they are doing this QE right now. We're going to make QE 4. They might as well stay with it. Okay. And last but not least, right, they say that, right, the strong job data, right, he don't think that the data are strong enough. He felt that the data is still not strong enough. That's why he said that there's no much reason to consider. But only when you see a very strong job data and the economy is really, really going and it need to be curbed, so then they will go into the considering of raising the rates. So all these videos later on, I'll upload into the Anything Under the Sun group. You all can watch it. Okay, so apology on that. Yeah, because since I'm using, that means the Wi-Fi is not that fantastic. Even I'm using my hotspot, but probably not that strong. Okay, understand. Thank you. Thank you guys for your feedback. Appreciate that. Okay, so of course, Federal Reserve, they are not saying they're not going to do tapering, just that they may move very slow because they are still going to continue this $120 billion purchase. Okay, only problem is that now people are speculating, like what I speculate, right? I think that the movement, I believe that they will actually talk about during the Jackson Hole convention. But the thing is now they're saying that, okay, whatever they say by Federal Reserve, right? It seems that, right, they may not say it during the Jackson Hole. So I think Powell move it out in terms of what the folks in the market were thinking. If you are setting up for announcement in Jackson Hole, it seems that his comment today and make it less likely. Okay, so trying to say is that, right, this guy is a US economist of Bank of America, says that the way what Jerome Powell say, then likely they will not have anything during Jackson Hole. So that's why now you see the point here, when everybody is on one side, now Jerome Powell say, no, likely, in a way that we will need more time. So now market say, don't have. Okay, so now market say, maybe don't have, right? Now market move away from this Jackson Hole thingy. Well, 2 ways to look at it. Eventually, he has to do this tapering. Eventually, they has to do it. So my point is this, now by saying this, right, and by saying all this, it throw people off course and let people think that maybe they shouldn't taper. But I kind of believe that they will still do it, okay, during the Jackson Hole period. So you see, they actually caught the word. And by saying coming meetings, it's a plural, right? So it's telling you that nope, the next few meetings, then we talk about tapering. So that's why every single word the Federal Reserve uses is so powerful, so read into that, okay? So that's the reason why maybe Jackson Hole, nothing, okay? So maybe nothing, but I believe there will be. That's my personal take. Fred, lame excuse from Federal Reserve. They started on a wrong foot. Now they have to hard retract. Of course, like I told you this one, that joke video, right? I show you about when things happen, they say that it's wait for a while. When it really happened, then it's too late to do anyway. This is very typical. Since Ben Bernanke, since Ella Greenspan time until now, right, never have changed. You notice that ever Greenspan time until now, right, all the Federal Reserve, right, the way they do things is the same one. They only will like tell you that, okay, things has gone wrong already, let's look at it, but you just don't care about it, you know. More important is to save the world, save the economy. They'll tell you that straight in your face. Yeah, just to make sure that they get it done, okay. So basically, right, some of them feel that, right, they need more time. They feel that now there is a chance that the tapering will not come in so early. And they say that likely the tapering will only come in December. So now you realize now everybody starts to shift their goalposts again. So you see, when everybody starts to shift their goalposts, right, that is where I get a bit worried. You understand my point? Yeah. So anyway, they're saying that now the statement is a bit short, although there's hawkishness, right, but the market still feel that, right, the market will take some time to taper. Fred, loads of rubbish from them. They claim economy doing well, cutting 5 to 8 billion per month can cause serious damage. Okay, like that, Fred. Now, Fred, I can be upfront with you. Seriously, they know that the money they put in is just to make sure that the market still stay up, because we know that the economy is not moving. Because you put so much money into the system, everybody is so happy. There's so much money to the point that the bank had to now throw back the money back to the Federal Reserve, right? This tells you that the money is not going into the system. If the money that was given to the banks is going into the system, then the people, the whole economy will move. But the problem is this: the banks are not very comfortable to lend, because if the bank lend to another party and a party misuse it, right, the bank had to pay pay back this money. So that means that the money they take from central bank, they have to pay the cost again. Now the people don't want the money other than trading, because why? Why must I take this extra money from the bank, put myself in the liability position, pay an interest of 2% on average per month, and then after that, what happened? What if the business fail? What if the COVID comes again? What if there's no economy? Then everybody thinks that, okay, there's a problem here. Okay, so it's basically from here itself, right? The people doesn't want to take money from the bank. So now how? It's in a spiral, right? So people don't want the money, the bank don't want the money, the bank money throw back to the central bank. So central bank take back the money, now how? The economy not moving. Okay, so the thing is this: it's not the 5 billion or 10 billion that really matters. It's just that now they need to find a way to make the economy recover. But the one that is holding everybody is because they have made the stock market such a wonderful place that basically buying, selling shares can make a lot of money. Then who will want to work? You think about this, okay? Well, Stanley, I don't think that anybody is smarter than the Federal Reserve. But if you put yourself in the federal position, right, you are in the very catch-22 position. You don't know what to do, right? Put money, also not correct. Don't put, also not correct. So the only thing is that they can do is that they actually really taper. Then after that itself, right, pull back the stock market money back to the system. And then after that, when the people they run out of a reason to stay in the stock market, right, they get out. But because Wall Street runs the Fed, in my opinion. So if that's the case, right, Wall Street wouldn't want. I mean, Wall Street will want the stock to go higher all the way to kingdom come, correct or not? So you look at this index from 1896 and then now, right, the Dow Jones have been going up all the way. So it's not going to be, I tell you this, I'm quite sure in 10 years time, right, the Dow Jones will be trading at 50,000 already. You understand my point, right? Because we are living in this stock market whereby the boys don't care. That's why Singapore stock market, right, until to date, despite our economy is still okay, right, but we are still at 3,004, 3,006 level. We have not scaled 3,950. That was our all-time high back in 2008, right? Remember that? So this is a very different environment that we are in now compared ourselves to the Americans. Okay? All right, so the thing is this, I'm not trying to say that I'm smarter, or I'm not saying that you guys are smarter. I'm just saying that end of the day is that they are in a position whereby they move any way also wrong. So it makes a lot of sense for Federal Reserve to stay on whatever they're doing now. Really, why make themselves a problem? And don't forget, Jerome Powell will be in the office from now until February next year. So if you are him and you've done a super job during the pandemic, you have brought the market to all-time high, you have made everybody happier, then why would you want to do anything silly until February? You understand my point, right? So it doesn't make sense for him to do anything right now. If I'm him, I will just keep my mouth shut and just keep on pumping the money. Anyway, everybody's happy. Got my point? Yeah. So what are the reasons to stay bullish, right? So of course, there's some. Okay, so Jim Cramer calls out the Jimmy Chill contrarian. Okay, so apparently Jim Cramer, right, has people who always go against him, because we do know that sometimes Jim Cramer, whatever it called, right, the stock actually goes down. Not every time, but a good chunk of the time. So he was trying to say that, okay, short sellers who bet against his call, right, now is in trouble. So he says that you can go to his Twitter page. He did call on Alphabet, AMD, and Boeing, and 3 of them all went up. So yesterday was a big day for him. And of course, the short sellers who shot against him, right, got hit. So he purposely say this. If you read my mention column on Twitter, and be careful if you don't, okay? Because there's some funny guy 25 hours a day, okay, telling you to short anything I recommend. I hope they're joking, because if not, right, it will be full, right? Yes, indeed, yesterday AMD was up. It was up by 7% because the earning was fantastic. And Boeing, Alphabet all went up by 4% on average, right? So that's the thing here. He's just telling you that, okay, now Jim Cramer is the man of the hour now. He says that it's not time to short. In fact, it's time to buy. Okay, so that's the reason why you can look at Jim Cramer Twitter, and who knows, we get some get some tips of the day and profit from there. Okay. Sorry, I think someone was rushing up, didn't do my PowerPoint properly. Okay, now of course we saw just now, right? We saw yesterday the China state media came out to calm the investors, and of course today we saw that the China convenes the meeting with the banks to restore calm. And they have a virtual meeting with all the executives of the major bank to tell them to come in. So obviously that's the reason why all the funds came in to buy. Well, this was what exactly happened back in 1997, okay, and 2006. So all these are happening again and again and again. Now it's always good to have these local governing bodies come in to prop the market, but this actually give an outlet. It actually give, like, put yourself in a chopping board for the foreign investors. So if this time round, right, the foreign investors is all out together, a coordinated attack on the Chinese stocks, right, for political reason or for monetary reason, then by doing this prop up, right, that means that they are going to just give money freely to the foreign investors. Okay, but of course, on the flip side, okay, if they manage to win this battle, then of course, then the foreign investors will be outright. Then the current state is winning. Then later on, if they can push even higher, then the foreigners who miss out this run, they will have to answer for themselves. So my point is this: we saw the Chinese market coming down quite a lot, right? So that is the reason why we need to be very, very careful. Okay, we need to be very careful on the entire movement. Okay. Okay, yeah, indeed, Fred. That's why the Federal is still calling the short law. They are the smartest one. So let me just bring you back to the charts, okay? Just give me a short moment and bring you to the charts. Okay, let's bring it up. Okay. Okay, so you can see that now this is the China A50 counter. It's not doing that well at the moment. You can see it's coming down right now, right? So you look at the whole chart, you look at the long haul, you can see this is the China A50, the entire movement, from the lower end all the way stretched to the high, and then the market really come down and hit the 61.8, and then incredibly it hit the 61.8 and then recover. Can you see that? But now you can see the sellers come back in again. Now, if the market is to take up this entire white candle, right, that means that all the prop up has gone to waste, and that will actually means that all this prop up is free meat to the foreign investors. So this is very, very critical. The market has to really hold up and doesn't let this white candle be taken out. You see, the last time when they prop up here, can you see this point? This is the one that killed them. Look at this. This was a prop up back then, right? The market up by almost 1,000 points. Then the next 10 over days, you look at it, the market liquefied it totally. The market liquefied the entire upside. Then after that, of course, when it loses the entire white candle, right, it will come down the same magnitude, and that's why the China A50 come down. So if you look at the chart from the long haul, right, you look at it right now. So you can see that there are three major white candles there, which I told you before is quite a bit of worrisome. So the thing is, if the market do come down, right, this is going to be the point that I'm watching out, okay? This is the point that I'm watching out here. So if the market do come down to this area, then maybe I believe that this will be a very good time to buy into the Chinese market. But of course, in terms of the traditional pattern right now, right, the last time we see such a crazy movement in the RSI, right, is really some time ago already. And of course, the market after that did recover. So you look into history, right, the last time we see something like this was here, when the market drastically fell, then it recovered, but that was back in 2008, 2018 during the taper tantrum. And of course, the market gave all the way down over the next few months, all the way down here. So what I'm trying to say is that I believe if you look at the cyclical manner, this is one starting point all the way up, then pull all the way down. So it goes through an entire cycle. Then this one, it goes up all the way to the high, then came down, but it actually stays about the 50%, 61% mark, and then rebounded. So I kind of believe that this is the same thing happening again. So it should be able to stuff itself around this area. If the market can stay above 61.8 firmly, right, then likely the China market will recover again. So we will have to watch this closer because of now we have a lot of politics ongoing now for the market. Okay, got the idea? Yeah. Oops. Okay, so that is what's happening on the news right now. Okay, then we look at this is what happened. So when the market was crashing down, right, the Chinese stock came in when they call in the national team to come in to buy. And after 3 days of carnage, right, the Beijing plunge protection team came in and plugged all the hole up and pushed the market all the way up, right? Yeah. So that's why when you see something like this, when the market basically you can see that no matter how the fundamental is bad, right, but the stock keep on going higher, right, you just have to follow through the buy because usually it is because someone is involved in it and it has to be something very big. For an index to go up, it's not a stock. Stock can be manipulated. For index to go up, right, you need to push everything at the same time. Then seriously, who has the means and power? Only one top people, which is the central bank. Okay, got the idea? Yeah. All right, so we come to the last part, which is alternate market views. Okay, this is whereby I get a bit interesting. So let's hang on a few more moments. We end about 12 o'clock, okay? Okay, so first of all, you can see that this is the FOMC in June, whereby they talk about that. And then the market was the fear factor of inflation. We saw the implied Fed rate went up, okay? Then after that, Jerome Powell saying no, and then they push the yield down, and that's why the Fed rate came down. Then the yield came down already, right? But yesterday, the way they talk about it itself, right? Actually, there's a bit more hawkishness because they're not talking about that it will be a rate hike in year 2022 or year 2023. So that is just the reason why that you see actually now the implied rate go back up again a bit, okay? So do note that is going to be an interest rate hike in year 2022 end and maybe year 2023 early. So if you move backward itself, move back, you do a bit of like, before they do any form of interest rate hike, there must be tapering first. So 120 billion now today is still going to be staying there, right, for a few more months. So which means that if maybe the tapering will come in December, so December 2021 is the first taper, then maybe they just taper 20 billion. Then after that, another 20 billion, 20 billion, 20 billion. So if they do it every 20 billion in every 2 months or so, it will take about 6 months to finish up, right? So just nice, sorry, 6 months, 12 months, sorry, to finish up the entire thing. So that's the reason why I say that there is very likely a chance to see the tapering only starting by December, if let's say they're looking at this plan of year 2022 to do the first rate hike. You got my point. So from now till the end of the year, I believe that if there's going to be any crisis, any form of black swan, or anything that's going to bring the market down, it's not a time to short big time. It's a time to look for buy again because this is what is happening right now. You understand, right? So can we clear with this? I repeat myself. I'm going to write it down this time, Rob. I'm going to write it down, okay? Okay, based on the Fed plan, okay, they will keep saving the stock market with the 120 billion buying. Hence, any big sell-off or black swan will be a great opportunity to buy. Okay, are we clear with that? Now this time around, I write in and make sure that you guys don't get it wrong. Okay, all right, yes indeed. All right, but of course, when the interest rate and environment really kick in, right, that is when all the problem will arrive already. And that's the reason why 2024, right, the market will be quite interesting, because if they really do what they're supposed to do right now, and they really do the interest rate hiking in 2023 example, then of course the cost increase, but if the economy cannot recover, right, then we have a problem already. Then we have a serious problem in 2024. You understand my point? But of course, it's many years later. Okay. All right, now this is why am I a bit worried? If you look at it back in the chart, okay, 2003 to 2008, this 5 years, every quarter, this is quarter chart, every quarter you see the market will hold up the moving average all the way until when? Until the quarter breaks. Then we see basically about 1.5 years of sell-off. Okay, got the idea, right? So you take this measurement, you take this as a ruler guide, okay? You will notice that this is like a 45 degrees angle, right? 45 degrees angle, okay? 45 degrees angle already quite tiring, and it spent about 5 years, okay? 5. Now you see this, the last few run, okay? Look at this one here. This is like 1, 2, 3, 4, 5, 6. Look at the way the magnitude that they run up this chart. Look at the way they run up this chart over 5 years. Seriously, don't you find that it's a bit crazy? Okay, first of all. Number two, look at the angle of this chart here right now. Do you think it's 45 degrees? No, it's like 35 degrees or even 30 degrees. Now, in charting, we all know, right, if the market is going at 30 degrees angle, right, it will never end well. It will never end well. So what we're going to see is that anytime if the market loses a quarter, whereby I think it's 100% quarter, a quarter of down, right? This could actually propel the market to sell already. So that's the reason why at the moment now you cannot see, because Ferrum Power is just printing and printing non-stop. That's why again in this video I try like you here, but this is something you watched before already lah. It's just like being asked. Okay, cannot play already. Okay, never mind. It's just basically showing that Jerome Powell is being asked, so how does Federal Reserve pump up this money? Where they coming from? And the Jerome Powell just say that, we just digitally creates this so-called money. Okay, so you get an idea now. So Federal Reserve is keep on doing this. It's not healthy to the market, but again, if you are in a position, of course, why want to be poorer when you can be richer, right? Okay. And the last part, this is the one, take a look now, everybody. The one in the dotted yellow line are the day that the market completed FOMC meeting. Now you see a very interesting thing from January to now. There are 4 FOMC already, right? Do you notice that after the post-FOMC, what happened to the S&P? Interesting, right? Very interesting. Then after the post-FOMC meeting finished already, if the S&P sell off, right? You notice that there will be a turnaround, and after the turnaround, wow, the market will go up a lot. Look at this. All right, okay, I'm going to put in colors in. Can you see that? After the market turnaround, the market will go up and it'll break the high. Same thing, break the high. Same thing, break the high. Same thing, break the high. So you cannot deny this, that I'm half expecting to come down first. Then you must go and look at this point. When the market U-turn, right, what are the telltale signs? Okay, what are the telltale signs? I'm sure you can go and find it. Okay, we'll cover this tomorrow, the telltale sign. And once the telltale sign really come out, right, the next thing you need to do is look out for the buy signal. Then if you do it properly, right, this time around, you'll be able to buy again alongside with the 120 billion that will come in. And that is the reason why, I say why this Tom Lee says that the S&P can go up to 4,600. Well, based on what we're seeing now, right, it is very, very possible. So that's the reason why I'm saying this, that a pullback of substantial level, okay, if you believe that this is going to happen again, there will be pullback. That once the pullback is over, there'll be buy up. So there's two direction that the market will be doing. Two direction. So if you can capture this right, I'm quite sure you're gonna make a lot of money from the market. Cool stuff, right? Like it? Okay. All right. So that will be all for today. MAO. All right. Thank you for waiting for me. All right. I hope you will do all your best for today, and I wish you all the best. All right. I'll see you online again later on. I'll pump out all the videos for today. Okay. Have a great day. Thank you, guys.